Hello friends, welcome to all. I hope you are well. Today, I will try to tell you how to create the strategy, make the graph talk, and earn your money. So when we open the chart of any parity, what we need to look at first, what we need to pay attention to, how we need to understand what is what. I will try to explain these, friends. So does a chart continue to rise or fall? We need to understand these, friends. I will try to explain them to you as much as possible. Before we move on to the video, if there is a situation that you want to ask, I will try to explain it if you write it in the comments section. I will try to help you as much as I can. Do not have any doubt in your mind about this. If there is anything on your mind in the training videos, my Telegram address is available in the explanation section of the video. You can come there and ask whatever you want. I'll try to help you friends from there. I hope you like the video. I hope the video will be useful for you. Now I'm moving on to our training. The chart I'm opening right now is the 4-hour chart. Why did I open the 4-hour chart? In fact, you can apply these tricks in all periods. I deliberately opened the 4-hour chart for you. Because if I open it in 15-minute, 1-hour charts, it will be more difficult for you to understand because there will be too many candles while explaining the video. That's why I opened a 4-hour chart. You can also use this strategy on the daily chart, the 4-hour chart, the 15-minute chart, and the 5-minute chart. Now basically friends, when we open up the chart, the first thing we should look at is the candle formations. I didn't tell you about the candle formations. But you can understand candle formations by doing a little research on Google. I don't want to give wrong information. As far as I know, there are 21 bullish candles and 13 bearish candles. In other words, bullish formations are called candle formations that signal bullishness. Bearish candles are also called bearish candles. By the way, friends, what I'm telling you right now is not investment advice. It is purely for educational purposes, so I will not show you the names of the formations. You can understand which formation it is by looking at Google. Now what should we look at first? Now friends, first we look at the last 4 candles on our chart, so 1, 2, 3, 4. But we don't look at the first candle there, that is, the active candle, we look at the 3 candles before the active candle. So 1, 2, 3. We look for a pattern in those 3 candles over there. If there is a candle formation there, it makes our job much easier. Because we can understand in which direction the price chart can go. You can also use them in stock market. You can also use it in cryptocurrencies. I would like to point that out. Let's look at the 3 candles here first. If we can't find anything in the 3 candles here, we cancel the candle here. Or we include the candle here, friends, we look at the 4 candles here. Why don't I count this candle? Because this candle is active right now, it cannot show us the future direction. Because if that candle produces a buy signal right now before it closes, that candle may turn into a sell signal close to the close and mislead us. So when looking for a candle formation, look at the last 4 candles here. So pay attention to the first 4 candles, but while looking, check the 3 candles before the active candle, not the current active candle. Look for a pattern there. I want to say that the candles over there, this candle has a meaning, friends. The 3 candles over there mean something. If we know the meanings here, our job becomes easier. I'm trying to say this, for this you can learn by doing a little research on Google. So if you write candle formations and search, friends, you can see all the candle formations in one frame, along with their pictures, what's what. This is our priority, so while we are talking about the chart, we first look at the candle formation without doing anything on that chart. We look to see if there is a candle formation here. It may or may not exist, that is, there may or may not be a candle formation, friends. Next, we need to know the direction of this graph. So we need to know the direction of the trend. We need to know if this trend is up or down. When we look at the chart more or less like this, let's take it back a bit, we can more or less know the direction of the trend. We can see the rise coming from here. But you always set your own trend. Because you have to create your own strategy, friends. Now I'm going to draw a trend line here. I'll set the trend first. When we look at it now, friends, there has already been a fall from here. Then, as you can see, the price started to rise again. Now, while drawing the trend line, friends, from where the fall ends here, I need to draw a trend line from here. So let's draw a trend line over there. Including this candle, friends, I draw a trend line from the wick of that candle. As you can see, I just drew it. Now you may ask, sir, why didn't you include the last candle in your trend line? As I said, friends, the direction of the last candle is not clear. When it closes, then we draw the trend line. So if I had included the active candle while drawing this trend line, I would have drawn it this way. But that would have caused me to draw the wrong trend line. Because the candle has not closed yet, so friends, I do not include the last candle. When drawing the trend line, I always include as much as possible from the active candle here to the previous candle. Now I see, yes, it touched here and started the trend line. It touched it here, too, and it worked as a very good support. In the same way, it has touched the trend line a few times here as well. Here the price fell below the trend line and rose again above it. Here is where we should pay attention. This is an uptrend, guys. As you can see, the slope is already going up. It doesn't matter to me if the price commits a single violation. So look at this, now we're going to dig a little deeper. Now this candle closes below here, it can rise again. Or it closes above it but may have extended the wick under it. In other words, we cannot say that one violation, two violations will damage the health of the graph for us, let's not forget that. Now I have drawn the trend line. What I need to do is find the support resistances of this chart. In this, I need to get support from this Fibonacci number sequence. What am I doing, guys? I'm drawing my Fibonacci. I'm taking the Fibonacci from here. I'm drawing from here, I don't go retrospectively as a long term. Here I am shooting from the first hill. To where? To the bottom. Here is my bottom, where my trend line begins. I couldn't quite take it, wait a second. That way, friends, yes, I took it right. I just drew my Fibonacci number sequence. Now what I have to do here is to identify the support and resistance here. So I immediately take the trend line again, I take the horizontal trend. Look at the support zones over there, there is a support zone. I draw a horizontal line here, then I draw a horizontal line above it. Friends, I need to get the graph to talk. Because I need to know where to go, so I'm drawing the Fibonacci number index. I drew two parallel lines to the resistance and support of the current last bar. You can shoot there too, but we don't need to shoot there right now. Then I close my Fibonacci number sequence. And as you can see, when I close, I see that the price is currently moving between support and resistance and above the uptrend. But this is not enough for me, my friends. We also need to find the possible declines and possible rises of Fibonacci, which we call Fibonacci impasse. Because why do I find this? Now, friends, I am giving an example. We have drawn the Fibonacci support resistance levels here right now. But here's another thing, there are support and resistance levels between them. We need to find them too. So again, the trend basis here is referred to as fib extension. This is normally called Fibonacci impulse, friends. Normally the Fibonacci impulse is drawn as follows. You draw from the bottom to the top, you draw from the top to the bottom again. But now, since the last bar of the chart has made a new low, if I draw it this way, it will not give me a healthy result. If the bottom was here and the price was above that, yes, I would use the bottom right here. So from here I would draw from the bottom, I would include the top. I would draw from the top to the bottom again. But as you can see right now, this is the bottom, the last bar low is just forming the bottom, we're going to draw Fibonacci right now. So this gives us a false signal. That's what we're doing, friends, we're going a candle back. This time we are doing the opposite, we are holding the top and making the bottom here. We're dipping here, then back here, guys, we're making a summit. Let's pull it right. It will be healthier if we shoot it this way. There is a problem with the mouse, friends, its sensitivity seems to be a little impaired or its battery is running out. We were able to pull it off, albeit with difficulty. Now after shooting here, friends, let's enlarge our graph and we need to draw support and resistance lines on the lines we drew from impulse here. So let's make this a different color, let's draw it like this, let's do it as a horizontal ray. There is an impulse over there, as you can see, let's draw an impulse here. Then let's draw an impulse in between. I'm done with this place, guys, now I'm closing this one too. And as you can see, friends, I have simplified my chart as much as possible right now. What did I do? Why did I do impulse, friends? Now, sometimes between the Fibonacci number sequence, that is, between the support and resistances, the price is returning from the middle and we say that it has returned from the middle because we do not know the support and resistance of the impulse there, or because we cannot see it, in fact, it does not return from the middle. Now when we look at impulse is here and the chart price is already above support at the moment. But the wick blue fell below the impulse, then rose again. Here we can talk the graph as follows. We wait for the candle close, as long as the candle close is above the support for us. As long as our support over there is not broken, look as you can see here. Price is closing above the support. Then it throws a red candle and lights a green candle again. In other words, as long as the price stays above the support, we predict that price will go to the next resistance. Where is the next resistance, friends? It is its own resistance in the Fibonacci sequence of numbers. And in between, that is, I call them psychological support and resistance. Here are the support resistors of the impulse in between. Then friends, this way, we set the trend. If we cannot draw, we can determine the direction of the trend as follows. Let's open two EMAs. Using the EMA, that is, using the moving average, friends. Usually use one of the EMAs on 4-hour chart and 1-day chart, friends. It gives you wrong results in low periods. Let's change the color first, so it's a lighter color. I set the value to 10. And I'm setting the other setting to 50, friends. In this way, I can determine the direction of the trend on the chart. I'm telling you this as additional information this way. Let me show you how I determine it. Looking at our chart now, the price is already above the 50-day moving average. It has already crossed a long time ago, now it shows us that there is an ascending trend. It has crossed quite a bit before. We foresee and know that this trend is now an ascending trend. Let me tell you this, friends. Now I'm saying this, let's make the graphic talk, I say. This is how we make the graph speak. We can understand the language of the chart with simple basic, technical information. And by making the graph talk in this way, we solve the direction of the graph, we understand it. So what we actually need to do, we need to have plans A, B, C, D. There are 29 letters in the alphabet, you better have 29 plans. Because when a plan goes wrong, you have to activate your second plan, Plan B. Now here we have determined the direction of the trend on the chart. We took an input, determined the support and resistance in between. We pulled the Fibonacci sequence of numbers, identified the support resistances in the Fibonacci in between. And now our job is this, friends, we expect this. Will the candle here close above the support or not? Or will it close above the rising trend or not? If the price closes below the support, we wait for the price to come to the next support below. If the candlestick closes above the support, this time we expect it to try the resistance again after a small horizontal movement there. If we know these, we will get rid of great harm. Now, another issue is that we did them this way. Currently we have made these withdrawing, here we can get support from indicators. For example, you can use RSI on the chart, friends. From the RSI, you can understand the direction of the price there. In other words, if it is above the 70 region and now the RSI has fallen down, here now the RSI is swollen, we can now understand that a sell signal is coming. As I explained in other training videos, MFI is money flow, money inflow, friends. If the money flow has taken a downward situation, there is now a sale. We can understand that the price will decrease, with these we can support our chart. We can also use Fisher in the same way. I'll even show you them. We open up Fisher, you don't need to change their input settings. As you can see, Fisher has given a sell signal here on this candle. Then friends, here we use the RSI 14-day period. Let me write direct relative strength index. We use the 14-day period, guys, we check the RSI. The RSI is currently not in the oversold zone, i.e. it is not above 70. It's an ideal level where it's at right now, guys, we can take a look at that. Then we look at MFI, friends, we try to understand whether there is money inflow or not. When we look at it, we see that the MFI also takes a normal horizontal position. So actually, what are we waiting for right now? We are waiting for the closing of the last candle here. Because the candle here will determine our direction on the chart, friends. If this candle closes below support, we will wait for it to drop to support levels. If the candle closes above the support level, that is, if it closes above the support level here, we will wait for the price to come to the resistance, friends. This is our logic, we can understand it from the graph. Also, I get this question a lot, teacher, how can I understand these rising graphics? As I said, there are many formations here now, you need to know the formations. For example, triangle formation, flag formation, wedge formation. Even in the wedge formation, you can get really high 20% to 30% profits. We don't need to look at charts drawn by others. Very simply, we make the graph speak by drawing our own graph and following that graph. Then we set a strategy here, that is, we set a roadmap for yourself. What I call the strategy is, will the price close above the support or not? If it closes, how should I proceed? Or if it doesn't close under it, how should I proceed? We need to determine these, we need to pay attention to them, friends. After that, from now on, I say this, it's up to you. Where you come out and where you enter the transaction is up to you. I already told you about ATR, you can also use Ikimoku. You can also get support from Ikimoku in 4-hour and 1-day periods. I just had you draw on the graphic today, I showed you the drawing. What it means to us, we need to find out. We need to know these. Let's not include the last candle when drawing an uptrend line because if we do, a line will come from here, this will be a false signal, friends. We need to understand this well. Then we drew support resistance lines. As you can see here, it's moving in support right now. Price touched the impasse once and rose again. It's back to the support above. We see it, we need to understand it, friends. We need to make the graph speak in a way that we can understand. That's all I'm going to tell you in this video. I hope this video will be useful to you, I hope you can create your own strategy. As I said, you can use it in every period, you can apply it in every chart, the rest is up to you guys. The way you use it, the way you earn. What I want is, create your strategy, make your graph speak, earn your money. The thing is simple, if there is any tutorial you want me to explain or if there is a situation that we call what is this, if you specify it as a comment in the video, I will shoot the next videos according to them. Because I don't want to shoot too many strategy videos in a row. You get bored, I get bored, and you don't understand anything from what I'm talking about. I say it again, friends, the drawings on the graph I told are not investment advice in any way, they are purely for educational purposes. Do not invest in this way, you will lose, friends. Take care of yourself, goodbye, I wish you good luck, see you soon.